We had a crazy rally on Friday in many of the Magnificent Seven stocks. Microsoft was up 2%, Apple was up 6% on announcing a massive buyback program. Google, Meta, Nvidia, Amazon, most of them were up not just on Friday, but they were mainly up on the week. They did amazingly well on earnings, and I don't do these videos often, but I try to do some videos, try to update you on my view on the market, review some earnings of stocks, review the sentiment. Is it time to be a little bit greedy? Is it time to be a little bit fearful? And what kind of things we could do for the portfolio. So I try to do these things. My last video was why stocks are close to bottoming out, and it was around 21st of April. And since then, I mean, it pretty much did very well since then. I'm not trying to time the market or try to find the bottom and trade it around it and all these things. It was just the title of the video, but my main point is why we will not have a market crash in 2024 and when I believe will happen. And this is just my opinion on it. Now, for the Fear and Greed Index, it has bottomed out around 32, which was in fear territory. We're still somewhat in fear territory, but a lot of things have happened since then, with even stocks like Google doing really well on earnings, and they also announced a dividend, which kind of surprised me, but it didn't really surprise me because these companies are sitting on a massive cash balance. Google is sitting at $108 billion of cash. Amazon has $85 billion of cash. Microsoft, $80 billion. Apple, $67 billion. And Meta, $58 billion. The largest one is Berkshire Hathaway at $167 billion. Absolutely insane. And these companies are announcing dividends. They did really well on earnings. Google did well on earnings. Amazon did well on earnings. Apple didn't do the best, I have to admit, but the market did like the buyback program and some improvements in China, which helped it out. And most of the Magnificent Seven stocks, Magnificent Eight, they did really, really well on earnings, which really throws out the idea of us having a recession in 2024. Now, if you look at the retailers, a lot of the retail stocks are pointing towards a recession very, very soon, and they are normally a leading indicator in the market in terms of discretionary spending. But these, amazing companies, the Magnificent Seven stocks, big tech, they're still shining, they're still doing amazingly well, they still have a lot of cash, and they're using this cash to do buybacks, do dividends, reward shareholders for owning the company for as long as possible. So all these things did happen, and earnings were pretty much stunning for Q1 of 2024. In terms of the Magnificent Seven, or with Yardini, they have the Mega Cap 8, which I believe includes Netflix. But for the Mega Cap 8, they're still somewhat fairly valued. Now, they're trading at 27 times earnings, and I know it's much higher than it should be with much higher interest rates. But I talked about it before, and a lot of people say, this company should be trading at this price because now we have 5% interest rates, and in 2019 we had 1% or 2% interest rates, so therefore this stock is overvalued. Well, it's not the way it is. The market is always forward-looking. So if enough people believe that 5% interest rates are not the new normal, and if people believe that eventually we're going to have rate cuts, eventually rates are going to go back to the neutral rate of 2.5%, then they will always be willing to bet on such scenarios. And this is why the stock market will never be perfect. Where interest rates are at this level, the multiple has to be at this level. It will never be perfect because it's always forward-looking. So looking at all these things, the Mega Cap 8 or the Magnificent Sevens, they are still not extremely overvalued. Now, this is of April 26th, and they've gone up a little bit since then. So I would say the multiple is maybe 28 to 29 times, which is still expensive, but it's nowhere close to a place where it was in 2021, where it was just absolutely obvious that these companies were extremely overvalued. I talked about Meta. I still believe Meta is offering decent value, even though it went up so much. And it definitely wasn't the case for most of these stocks at the peak of 2021. Now, for Jerome Powell, this is what the market was scared of. They were scared of Jerome Powell announcing some kind of a rate hike because we had higher inflation than expected, but he pretty much ruled it out. He said it's very unlikely that we're going to have a rate hike in the next meeting. But this whole thing is very complicated, and I just feel bad for a lot of the macro investors. It's crazy. It's very hard to predict such events, very hard to base my entire investment thesis on what Jerome Powell is going to say or what inflation is going to do. And it's very hard. That's why I love investing in stocks with fundamentals, because they are easier to analyze, easier to somewhat predict than trying to predict what the Fed is going to do and how it's going to affect things. It's very difficult, but this is the story for now. Now, I always like to talk about this in my videos, A lot of you maybe saw this chart that most of the decline tends to happen after the Fed pivots. The Fed pivoted in late 1990s, 1999, 1998. We went down 51% on the dot-com bubble crash. They pivoted before 2008. We went down 58% in the 2008 stock market crash. They pivoted before March 2020. We went down 35% after the Fed pivot. And a lot of people are waiting for the Fed pivot because they believe if the Fed pivots, the stock market is going to crash. But some other people also believe that if the Fed cuts rates, this is bullish for stocks and stocks go up even more. And it's not as simple as it sounds. And this is the chart that I found around this subject. And it pretty much shows how the S&P behaves after the first rate cut, if we have a recession or if we don't have a recession. Now, in this example, if you look at the green and the darker color, for the green, whenever we did not have a recession, the stock market went up after the first rate cut, and the market took this as a very bullish scenario for stocks. Now, whenever it was in red or the light blue, we had a recession. And when we had a recession, the stock market went down. After the first rate cut, it was bearish for stocks. And the main reason it was bearish for stocks is because the Fed was cutting rates into a recession, which means companies had very bad earnings, they had very bad fundamentals, they were missing on earnings, and stocks were going down. So rate cuts are not always bullish. It depends on the scenario. Now the question is, if we do have rate cuts, maybe in late 2024 or maybe even in 2025, will the stock market most likely go up? Or will it go down? Will it be bullish or will it be bearish? It's mainly going to depend if we're going to have a recession or not. And one of the most accurate indicators, which had 100% accuracy, is a 10-year minus the 3 months, and has predicted pretty much every recession. It's been 100% accurate. There's no guarantee it's always going to be 100% accurate. But every time, even in 2000, it went negative. After it reinverted positive, this is when we had the recession. This is when we had the crash. This is when we had something bad happen. Same thing happened 2007, flipped out. 2008, we had the crash, financial crisis, recession. Same thing happened before COVID. We had a very weak economy even before COVID. COVID maybe was the catalyst, and then we had the recession. And now it's negative again. And it's very far away from turning positive. So this indicator, as I talked about in my videos, this is my main thesis, is that if we have some kind of pullback in 2024, it will be a small pullback to put in some fear in the market or something like that, and then we most likely going to recover. But in terms of this indicator, it's telling us we're going to have a recession, but not anytime soon. And if this indicator is right, to me, it's saying that the recession will most likely be later next year in 2025. And if the Fed does cut rates over there or cuts rate in late 2024, and we are entering some kind of recessions, and a lot of these Magnificent Sevens are struggling on earnings, going from high expectations, going into lower expectations, then this is when we could have a major pullback or a stock market crash. But I don't believe it's going to be in 2024. And this is what this indicator, which was 100% accurate, is showing us. And the last chart I want to show you in the video, this is a new one that I found, and it's very interesting. And this is pretty much the statistics of what happens after we have a bear market bottom. And on average, for a bear market bottom, or before I get into the average, the bear market bottom, as you know, the market bottomed in October of 2022, which was 10/12/2022. This was the bottom. Now, since then, the S&P is up around 43% from this bottom, and it has lasted around 18.7 months. Now, the average for the rally after a pullback and how long it lasts, the average from a bear market bottom is 157% gain on the S&P, and it normally lasts 57 months. The current one is not 157% gain, it's 43% gain, and it hasn't lasted 57.6 months, it has lasted 18.7 months, and the shortest one lasted 21.4 months. So it doesn't mean that this time cannot be different, but based on a lot of the statistics I showed you, and the graph of the 10-year minus 3 months, and even this one that shows you the average return after a bear market bottom and how long it lasts, all these things are showing me that we will not likely have a recession or a major stock market crash in 2024. If it does happen, it will most likely be later in 2025. So this is why I made these videos. I made this video on why stocks are nearing a bottom, and it was some kind of a bottom, if you want to call it a bottom, in the fear and greed index. I don't know what's going to happen from here, but I'm still finding good value. Even I said Meta is good value. Even Google is not extremely overvalued, to be honest. If you look at these fundamentals, they're really not bad at all. So I still believe this market can go, a little bit higher, and I'm just watching everything and seeing what happens. And this was just my opinion on the market in the video. Thank you for watching. Not financial advice as usual. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.